Hello, everybody, and welcome. It has been a couple weeks, but I am back in town ready to rock, and the market has been on quite a wild ride. So let's take a look around and then look for something to trade. So, as I said, if you've watched the market, the last week was pretty wild. You can see right here is a pretty big drop over the last week. This is the S&P 500. Again, they're all going to look fairly similar. This is the NASDAQ, again, big drop, and IWM has been a little bit worse than the rest, as you can see. So, what are we going to trade? Well, when the market gets really volatile, I like to stay in the indices because they're ETFs and they're volatile without being as volatile as a single stock. So when it comes to these, I like to stay in one of these three. So we'll just look to see which is the most volatile right now, since they've all basically done the same thing and look about the same. So if you look down here at this blue box, this is the implied volatility for the S&P 500 up here. So we're at 72 for the S&P 500. If we look at the NASDAQ, you can see this is at 81. And if we look at the IWM, you can see, okay, this one's the most at 82. So IWM or Q are about the same. And you can see IWM is the biggest, but here's the volatility graph right here. And you can see in this last week how it's just shot up as the market has gone down. And that's how generally it works. As the market collapses, generally speaking, volatility goes up, and no difference here. Market collapses, volatility shot to the moon. So let's take advantage of it. So let's go into IWM because it is the most volatile, and we'll make a trade. And we're going to go here to the 40 days, which tomorrow will be 39 because these are more liquid than the weeklies. And when things get volatile, bid-ask spreads tend to get a little bit wider. People are just a little bit more scared, so they kind of widen out the bid-ask spread, meaning things get a little bit less liquid. So we want to stay as liquid as possible to keep our chances the best. So again, I'm going to stay here in the monthlies. These are the standard expiration cycles, and that'll be 39 days tomorrow. And I've already set this up. So here's IWM, as I mentioned, and the stock is at 176. So what we're doing is, at this point, we're going $13 above, $13 below for the put, selling those two, and then buying the call and put $2 away. And as long as we're collecting 66 cents or more, this trade will be valid. So tomorrow when the market opens up, assuming nothing changes, we're going to go $13 up and down and create a $2 wide Iron Condor. If it doesn't get to 66 cents or more, that's when we start bringing the sides in, meaning the 163, 161, we might go to 164, 162, 189, 180, 191 might go to 188, 190. That's what I mean by bringing them in a little bit closer until we can reach this. And if it gets more volatile, we might even get further away. So again, we're going to adjust based on what happens tomorrow morning when the market opens up. But IWM Iron Condor is our trade for the week, and this is why we're trading it. It's the most volatile index out right now. And again, we're going to choose to trade in the most volatile index in volatile times, because if the indices are volatile, individual stocks are even more volatile, and we don't want to take these outlier risks, as they're called, if something crazy happens where some stock takes a huge beating. So this is our best bang for the buck, is staying in indices. IWM, SPY, QQQ, TLT for bonds, GLD for gold, that kind of thing. Those are all ETFs around entire groups of stocks or commodities. So that's our trade in IWM for tomorrow. Everybody, and welcome to an opportunity I don't think you're going to want to pass up. Now, the point of all my courses is to give you the knowledge base and the confidence to learn to trade on your own, and hopefully one day generate an income stream on your own through the options market. But the best way I've found to do that is to allow you to trade side by side with me. So the way you do that is if you go to sharpertrades.com and you go to the products section, two alerts will show up: the basic alert and the pro alert. Now, the alert itself is the same for both. The only difference between these two is the Pro will give you access to every course I've ever made, many of which aren't available anywhere else. Now, the prices, if you were to do it right now, would be $49 a month and $99 a month. But I'm so intent on getting you up and running as quickly as possible that if you go now to sharpertrades.com and you type in this code, you will get it for $1 for the first month for the basic alert. and you can cancel it anytime. So if you decide you don't like it after the first month, go ahead and cancel. If you like the alert and find value in it, from month 2 onwards, it'll click into $49 a month. Now the alert itself will send out 2 to 3 alerts per week, trades in real time, and they'll also send out all the alerts as far as managing the trades for the best possible profit opportunities. Again, you'll get 2 to 3 real-time trades per week, and any trades that are managed correctly for profits, you'll get those alerts in real time as well. So I really believe there's no better way to get up in trading as quickly and confidently as possible, beyond sitting next to me essentially and watching me trade and trading alongside me if you like. And again, I'm so intent on getting you there that I'm willing to give it to you for $1 for the first month to make sure you're comfortable with it. And if you're not, again, you can cancel at any time. So please jump on this opportunity. I really believe it'll get you up and trading as quickly and confidently as possible.